What's up, everybody? As we all know, right now in October 2022, we are in the midst of a very changing housing market. Some places in the country are still seeing multiple offers, like where I am right here in Montgomery County, Maryland, while other places are seeing significant price drops. The one thing we all have in common is interest rates are at an all-time high for the last 15 years. Last I checked, they were right around 7%. So what are you gonna do if you wanna buy right now, but you can't afford it because prices are still high and interest rates are high, and together they make housing unaffordable? Well, today I'm going to tell you how. I'm going to give you some great tips on how to buy a house in today's markets, how to negotiate it, and how to save some money at the end of the day. So let's just dive right in. If this is your first time to my channel, I welcome you. My name is Caryn Gardiner, and I am a local real estate agent here in Montgomery County, Maryland, and DC, and Northern Virginia, and we talk about all things real estate as well as different things about places to live so we can help you find your way home. And if you're thinking about moving to here and you'd like our help, just send us an email, we'll set up a Zoom, we'll get you started. So my first tip is to buy down the interest rate, or better yet, ask the seller or the builder to pay for it. They're feeling the changing market as well, and nobody knows if it's gonna get even worse. If you buy down the rate now, then you're buying down your monthly payment for the duration of the loan, which is traditionally 30 years. So for example, if you bought a house for $500,000, with today's rate, which is 6.625 interest rate and 20% down, your monthly payment would be $2,561. Now, if you buy down the rate by 2 points, your interest rate is now 6.125%, and your monthly payment is $2,430. That's a difference of $131 a month, or $1,572 a year. It will cost you $8,000 to buy 2 points, but like I said, I'm hoping the seller or the builder will pay for them. Now, maybe you don't have 20% down, and in fact, maybe you're doing a VA loan and putting 0% down. Let's look at those numbers real quick. Interest rate for a VA loan today is 6.25%. So your payment would be $3,149 with 0% down. After you buy it down with 2 points, your rate is now 5.49%, and the monthly payment is $2,901, a difference of $248 a month, or just under $3,000 a year. So it's a big difference. So that's definitely my number one tip when you're dealing with high interest rates, is try to buy the interest rate down now at the beginning so you can benefit from it for the whole duration of your loan. My next tip is to negotiate seller help. Back before the pandemic, when the market went crazy, it was quite normal for buyers, especially first-time buyers, to ask the seller to help them out with their closing costs. Here in Montgomery County, Maryland, your closing costs will be around 3%, so it's pretty typical for us to ask for 3% seller credit towards the buyer's closing costs. That 3% includes everything from transfer and recordation costs, lender fees, title fees. Pretty much will cover everything you need to close on a house except your down payment. Or you can use that seller help to buy down your interest rate. Now, you always have to check with your lender to make sure it's allowed. But at the end of the day, it's a big difference and less cash you have to come up with that seller help. My next tip is to negotiate the inspection. Now that we're having contracts that are more normal in this market that include inspection contingencies, once you do your inspection and things come up, and they always come up, definitely try to negotiate either for the repairs on the items, or maybe get a credit if you think you can do the repairs yourself. Remember, in most places, if something comes up during the inspection, the seller will have to disclose that to the next buyer if your contract falls through. So they are motivated to work with you and to try to come to a meeting of the minds where both parties are happy. If you can get a credit instead of repairs, if you're comfortable with that and your lender allows it, remember you can use that credit to buy down your loan like we spoke about in tip number 1. So do your full inspection, and after you get the list of things that are wrong, and like I said, there always are things that are wrong, negotiate with the seller to either repair the items or possibly give you a credit if you're comfortable with that and you can do it yourself. So my next tip is something that I've been doing for 19 years, and I've saved my clients thousands and thousands of dollars. And I've spoken about this in my other videos, and I've actually gotten some emails from you guys thanking me for this tip. And that is about title insurance. Ask the sellers for a copy of their title insurance. If you get it, and you have to ask, they're not going to just give it to you, but if you get it, give it to your title company and ask them for a reissue rate. Depending on how much the seller bought the house for is how much of a discount you will get. So if they bought it not too long ago for a higher price, you'll get a much bigger discount than if they bought it 30 years ago for a very low price. But it's definitely worth the ask. And if the seller says that they can't find it, ask them where they closed on their house when they bought it, and then ask that title company for a copy of it. And if you can't get it yourself, ask your realtor to help you, because we're pretty good at these things. This is definitely one of my biggest tips, no matter when you're buying, because it's just free money, but you have to ask for it. Like I said, nobody's going to volunteer it. They may not even know. So ask for a copy of the seller's title insurance and get the reissue rate. My next tip is to definitely check out and see if there are any community or city or bank grants or programs. You would be surprised how many places offer grants for first-time buyers. I had a client recently that got a grant from Bank of America for $17,000 that helped him offset closing costs, his down payment, and even helped him buy down the loan. Now, you obviously have to qualify for these different programs, but ask around because they're definitely there. I just saw it with my own eyes, and honestly, I thought there must have been a catch, but there wasn't. It was pretty straightforward. Here in Washington, D.C., we have HPAP, the Home Purchase Assistance Program, which offers interest-free loans and closing cost assistance to qualified applicants. So definitely ask around. Ask your lender, ask your realtor, do a Google search, but ask around and see if there's any grants with cities or communities or banks that can help you out. So those are my top 5 tips. The more money you save and the more money you put down, the lower your loan amount will be, and you'll probably get a better interest rate as well. The same thing goes with your credit score. The higher credit score you have, the better interest rate you'll get. So when preparing to buy a house, definitely keep those 2 things in mind. Save your money and be very conscious of your credit score, because they both will help you a long way. I hope you got some value out of today's video. If you want to learn more about Montgomery County, Maryland, definitely check out some of the other videos in our library. Thanks for watching. I do appreciate it.